Hey everybody, this is Jim at SP500chart.com. It is about 4:10 on April 2nd, 2014. Let me read this to you, then we'll dive right into the chart. The website and this video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. I'm starting out here on a 10-minute chart. You can see that yesterday we finished the day just a little bit over our 1884-ish neckline. Today we stayed above it. We're still not over it by a technically significant amount of 1%. And frankly, we won't be there until we're over 1900, at which point I think probably a psychological barrier will have been crossed, lending even a little bit more support for the idea that we are now starting another leg up. You can see that we encountered a little bit of weakness, not much, but a little bit of weakness around lunchtime or shortly thereafter. And quickly, the S&P just shrugged that little selling off. It was not much to it and said, nah, we belong up here. And we closed today right around 1891. I'm reminding you now that based upon using this as a neckline right now, this highlighted line right here, that we have a target, a minimum target, once we got over 1874. Now I know we got over 1874 back here, and we didn't get, and then that failed. Okay, because we hit more important resistance at 1884. But now that we're over 1874 and 1884, I think we can look to this pattern right here as projecting a minimum target of about 1905. Backing out a little bit more, let's try it on a 30-minute. We then have this double dip right here, which is a little bit of an unusual thing to see in a serving the role as a what appears to be now a continuation pattern. Some people might call this a double bottom, but it's not at the bottom, so that really doesn't make sense. What you might call this is a rectangle, because for a number of weeks we were range bound between two parallel lines, one at about 1840 and the other at about 1884. So this all took place within a rectangular area that we are now, again, not technically significantly over, but appear to be in the process of getting technically significant over. So guys, it's a good day. It's not a huge gainer by any stretch, but the fact that we stayed over this line that had been pesky for a number of weeks, I think is a very good sign. And I'll remind you again that we have an even larger pattern down here that looked suspiciously familiar as one of our inverted and truncated inverted and truncated head and shoulders patterns. And remember, we've seen a number of these. That's where you get a left shoulder, the head, and then just this little tiny, I think for a while I was calling it a flipper. It's not a fully formed shoulder. It's like a finger. It's just this little tiny appendage that's underneath that line. We broke out over that, and then we've come down twice to that neckline region, and now it looks like we're ready to move on up. So guys, looking at a 5-minute chart, we pointed out on Monday that that it looked like we may have been making either a little reversal here to back test our broken support line or a bull flag. Obviously that was confirmed early yesterday as a bull flag. We've already talked about that. The other thing that's a little interesting is the fact that even though this light orange line was made light because I don't think it's as important as it perhaps used to be, but the fact is we now regained a position above this line, which again I think is just another sign that this market still has some legs. So I'm real happy with the way things have gone. Well, once again it happened. My phone rang and I was right in the middle of a thought with the video, and then a client of mine called, had to take that call. But I think I was just wrapping up that we were saying we were once again above this this line that broke, and that lends just a little bit more credence to the fact that it looks like we are heading up. Now, one thing that's kind of interesting too is it's not easy getting these little peaks to line up. So, I mean, if we went back here, we could say, well, is that it? Well, maybe, sorta. Or is it this? Well, nothing lines up exactly there either. So I'll tell you what I'm going to do. I'm going to hold off on any little channel lines for the time being as they relate to the 5-minute chart, because I'm just a little flummoxed over what we're seeing right now, because these things aren't lining up too much. And sometimes after you get a breakout over resistance, you then establish a channel. We've seen this happen before, where you have a bottom, and that bottom point is not that useful. For example, if we tried to say, well, this is our bottom channel, well, maybe, but more times than not, or as often as not, you end up saying, nope, ignore these two down here. This new trend really was not established until we got over this line right here. So, I mean, this could be what I've got up here right now, but I'm not going to go with anything at this point in time, just because I don't have a real solid feel for it. So there you have it. Looks like we're on our way to an intermediate target of 1905, a slightly longer term target in the 1920s, right here about 1928, based upon that little rectangular pattern, and then an even more lofty 1950-ish, 1955, 58, something there in the mid-1950s, based upon that larger inverted and truncated head and shoulders pattern. So there's your S&P 500 technical analysis update for April 2nd, 2014. Thanks so much for watching. Take care.